All right, so you clicked on this video and maybe you have some interest in investing in real estate, making passive income, investing in things that can produce cash flow on a monthly basis for you guys. So today I want to talk about rental arbitrage, what it is, how you can do it with literally little to maybe even no money. It's a way easier to partner up with a friend or a colleague that also has interest in investing in real estate and earning cash flow on the side as well. Before we get into it, you guys, please hit the like button and subscribe below. I really appreciate it. So first, what is rental arbitrage and why should you be interested in it? So you'll often hear me refer to it also as Airbnb arbitrage. And basically, you as an investor, you're interested in real estate, you're interested in building a portfolio that produces you cash flow each month in perpetuity, but maybe you don't have a massive amount of money or even $10,000 even to invest as a down payment potentially on a rental property. And that can be a prohibitor for you as an individual to start investing in short-term rentals or even long-term rentals. So a great way to get into the real estate game and produce actually potentially massive passive income or cash flow on a monthly basis is Airbnb arbitrage. So you as the investor, you will actually find a house, condo, apartment, lake house, beach house, whatever it may be that is currently listed by another owner who owns the property, listed for rent, and they are seeking a long-term tenant. So they are looking to have you or somebody else as a renter sign a lease agreement for whatever the term may be, 3, 6, 12, 24 months. And once you sign that agreement, you will in turn list it on Airbnb as a short-term rental. And whatever money that you make each month that exceeds the amount you're paying in rent and other variable and fixed expenses that you have with the property each month is pure cash flow or pure passive income. So what are the benefits of this? It is literally very little or even no money out of pocket. If it's a furnished apartment or furnished house, then you literally have nothing to do but just to list it on Airbnb. There might be a few costs depending on what city or area you live in. If you have to pay for a city permit or whatnot, there may be an application fee that you have to pay in order to apply to rent the place. But outside of that, again, if it's unfurnished, you have to pay to furnish it. So if it's a studio, 1, 2, whatever, however many bedrooms it is, it could range from maybe $1,000 to a few $1,000s to furnish it. But again, you don't have to worry about putting a down payment down and taking a large sum of money and investing in the property itself. You are literally just getting it ready to rent on Airbnb. Additionally, you may have to, or you will have to put supplies into place, whether that includes welcome gifts or goodies, snacks, wine for your Airbnb guests, whatever you want to do to help yourself stand out and get great reviews. Additionally, you'll need cleaning supplies. You'll need things like toilet paper, paper towels, dishwashing liquid or pods, and laundry detergent if you have laundry units, a laundry washer and dryer in unit as well. So just little things like that, those costs you're going to have to consider in your investment evaluation. Another big benefit is actually, especially talking right now through the market volatility and the economic uncertainty and the outlook in the next several months with the coronavirus. There's always worry of maybe a housing market crash, even though I personally don't think it's likely, at least not for the market that I am invested in. But you don't have to weather the storm of the ups and downs of the market over the years if you are solely doing rental arbitrage, because again, you are not the owner of the house. And if there is a market downturn and travel goes to near zero like it did from March to June due to the coronavirus, you can simply break your lease, and there might be some penalties to break your lease, but again, you don't have to risk going into foreclosure or not being able to fork up money to pay your mortgage and other things like that you'd be locked into ultimately if it wasn't a house that you own. So again, there is some risk that you don't have to assume if you're doing rental arbitrage. Another big thing is a much quicker startup time. Some of the properties that I've invested in, it takes a while to put in an offer. Oftentimes it's competitive as well, so there's several offers on the table. The current owner or the seller has to review those offers and then say they pick you and say, okay, we're going under contract. You go under a review period, and then that typically takes about a month to do inspections, appraisals, and go through underwriting and things like that. Once you're clear to close, that's typically about a month time frame that you're looking at. And then once you do close, then you have to furnish it and get it rent ready to go on Airbnb. If you're in a city that requires a city permit, then you also have to wait and make sure you check all those boxes as well before listing. So you're looking at 1 to 2 months, sometimes longer, depending how long it takes you in your particular area. So by doing rental arbitrage, you literally only have to worry about the permit and getting it rent ready as soon as you sign your lease and you're in the unit. I've talked about in previous videos how to get in real estate with little to no money. So in other videos, we've talked about how you can go in with maybe 1 or 2 other people to buy a place to rent out, which is still a great strategy. But maybe you guys have maybe only $1,000 between the two of you. Maybe you can rent out and sign a lease agreement together on a 1 or 2 bedroom apartment, and then in turn, co-manage that as an Airbnb, and you're going to split the costs. And again, your risk goes down even further when you're sharing the burden with somebody else. And then you can also share the benefits of the cash flow or passive income each month. The other great thing that I like about rental arbitrage is it allows you to get to cash flow quicker. So if you're just, everything you make over the rent that you're paying each month is, again, pure cash flow. So the quicker you can build up cash flow, the quicker you can get into another arbitrage property. So it's much quicker to scale with more properties than it is to save up to put another big down payment in a house and then save up to put another big down payment in a house. So you can obviously scale to many arbitrage properties much quicker than you would be able to if it were, buy and hold properties. So with that, if the ultimate goal is to buy and hold, which I would recommend longer term because you get the benefits that we'll talk about here in a minute of buying and holding a property, you are able to, again, build up maybe between 2 and 3 arbitrage properties. You can build up a pretty hefty amount of cash flow each month. Again, that's just going to scale a lot faster and compound into a lump sum that you're able to maybe buy your first property that you will buy and hold. So I kind of already touched on a few of these, but let's talk about the drawbacks of rental arbitrage. So it's not all, rainbows and unicorns, right? So you won't receive other benefits that you would if you were buying and holding a property. But again, if you do rental arbitrage, it may help you to get to the buy and hold faster than you would if you were just saving up from your current job and current savings. So, but with buy and hold properties, again, which you would not get with rental arbitrage, you would not get the appreciation of owning real estate. Again, your assets increase over time in value, especially in a growing market where supply is remaining steady or maybe decreasing and the demand keeps going up. Again, you look at a city like Nashville, Austin, Texas, or any other major city really, or even hot vacation markets, and there's so much demand from either investors or from homeowners or vacation homeowners that prices keep going up. Not only that, with inflation, again, the Fed just printed several $1 trillion for coronavirus stimulus packages, which is, okay, that's all great and hunky-dory for small business owners, large business owners, bailouts, and again, the stimulus checks out to you all that may have received one, over the past few months. That's great, but when you print money, it literally creates a greater amount of dollars fluctuating in the economy, which again devalues each dollar in itself. So commodities and assets like real estate are going to increase over time because again, there's more money fluctuating, and that's called inflation. So by buying and holding real estate, you're going to capture a lot of that appreciation and kind of ride the wave over the years. And not only appreciation, but you will get loan pay down, which we've talked about several times in previous videos, or I call equity pay down. So if you guys are familiar with an amortization schedule, when you buy and hold a property and you take a loan from the bank, your renters that you write on Airbnb are paying you each month. And again, they're paying down the loan for you. So if you're familiar with how an amortization schedule works, at the beginning, it's mostly interest and very little equity being or principal being paid down on that loan. And over time, the interest payments get less and less and less each month, and the principal gets higher and higher and higher. So over time, again, the equity pay down builds up, and you're getting equity. It's just like money being deposited in the bank for you. It's a great way to build wealth long term. So again, the major drawback with rental arbitrage is I don't think it's a great many year or decades long strategy if you want to get all of the benefits of owning real estate. The next one, which can be tough, is finding an owner who has typically done long-term rental units for many years is convincing them that it's okay to, have it written in the agreement that you will in turn short-term rent it. Because they may think, oh, what's the first thing that comes to mind? People coming into town to throw a party, which isn't always the case. It could just be family visiting from out of state and they're looking for a place instead of a hotel to rent. But again, there are ways to combat that, in which we'll talk about in a minute here. Another difficult thing is most places that are available for long-term rent are typically what? Apartments and condos. Yes, you can rent plenty of houses on the market as a long-term tenant, but they're often HOA fees. There's often apartment complex rules or condo association rules, and a lot of them do not allow short-term rentals. So before getting too deep in the weeds or signing off on a lease, make sure you have that conversation with the owner or the HOA representative, or again, the condo association, whoever it is, to make sure that those folks allow short-term rentals for that particular unit. So just piggybacking off of something we just talked about is, again, you need to speak and be upfront with the owner of the rental unit that you are not going to be living in the unit, okay? You are going to pay them rent each month, and in turn, you are going to short-term rent it for the time that you are paying them rent. And a lot of them are going to give you pushback that I don't want anything to do with that. So how can you get around that? If it's a great unit and you've done your investment evaluation and you think it's going to be a big cash flow producer for you. So again, you need to convince them and urge them that you will pay them rent every single month. You won't miss. They don't have to worry about a renter that they think may be late on their rent payments again. And this is a good one to think about, is a lot of long-term renters actually really live in the units. So again, short-term renters are there for the weekend. Think about when you stay in a hotel and maybe it's just you and a few others. Typically, you're not really even in the unit, right? You're out exploring the city. If you're at the beach, lake, you're out and about, and then you come back just to maybe eat dinner and then go to sleep at night and then go back out and explore the next day. And then at the end of the weekend, you're gone. So short-term renters really don't have, in my opinion, as much wear and tear typically on properties. Now, that's not always the case. Some long-term renters are great and they're very specific about how clean they keep their living space, but a lot of people aren't, and they really live in the unit. And again, each time they churn tenants every 6 to 12 months, whatever their terms are, they have to put a lot of money and work into repainting, maybe recarpeting and furnishing some of the areas of the house, apartment, condo, whatever it is. So you are certainly more incentivized to keep the place clean each month, because if your place isn't clean, you're going to get bad reviews on Airbnb and you're not going to make any money longer term. So that is a big persuasion point for you to talk with the owner of the house that it makes sense to do rental arbitrage. And again, the property will be professionally cleaned every time in between guests. So if you have guests, every week or every few days, the property is going to be professionally cleaned at least once a week if you're rented out how you should be. If they're still hesitant, you can offer financial incentive for them. You can offer to either own or split all of the maintenance costs with the property. Even though they're the owner, if something breaks or maybe the AC needs, a checkup, or the HVAC system needs a checkup, then maybe you pay for it, or maybe you split the cost of things like that. You replace the lights that go out and whatever other maintenance costs come along with the property. You can either split that or you can own that and take the burden off them, and then they get paid more money, and then they allow you to rent it out so you can achieve passive income as well. Now, one that is very enticing if I were the owner renting it out to a long-term tenant in order to do rental arbitrage is maybe you offer them more than their asking price in rent. Maybe you say, instead of $1,500 a month in rent, I'll pay you $1,700 or $1,800. And the reason that you can do that is because if you've done your homework on, what the average daily rent price is for the area on Airbnb and what the occupancy rate is, you have a pretty good understanding of what the investment or return on your investment outlook looks like. So if you can afford to pay them a few extra $100 in order to convince them to let you rent, if that's like a perfect unit for you to do rental arbitrage with, they should be more than willing to accept that offer, because they're trying to make money through their investment as well. So they're going to just make an extra few $100s a month and have their place, again, professionally clean, things like that. In my opinion, it's a no-brainer, and it could definitely help you along the way of convincing them that it is a good idea for them to let you rent it out on Airbnb. Lastly, again, if it's a perfect unit and they are very, very stubborn, you could do this last ditch effort, which is offering them a very small percentage of your revenue or of your net cash flow each month. And you can make this a gentleman's agreement, or you can have this written in the agreement that they get a certain percent of the net proceeds, again, that you make on Airbnb. And again, I would just encourage you to make sure you have a sound investment figures and you have a good estimate of what your net cash flow is going to be each month throughout the year, so you can maybe potentially offer them a small percentage of that. And again, this will allow you to do rental arbitrage in a unit that you maybe others wouldn't ordinarily be able to do, because you're offering them extra incentive to allow you to do this. All right, so before you go gung-ho on this, make sure that you do these following things before signing a lease agreement and attempting to do rental arbitrage. Again, make sure you're very upfront with the owner of, again, the property, whether it be a house, apartment, condo, whatever it is. Make sure you're upfront with your intentions. Don't try to kind of, dance around what you're actually intending to do. Don't make it seem like you're going to be actually living in the unit and then secretly running it on Airbnb. Just go ahead and get that out of the way and bring it up front with them, and then you can explain why it's beneficial for them to allow you to do it. And again, you won't be wasting time if you danced around it and then you get a month down the line and you're about to sign a lease agreement and then you find out that the HOA doesn't allow it or the condos association doesn't allow it. Then again, you just wasted a ton of time that you could have just nixed that property and moved on to the next one at the beginning of your evaluation process. Make sure that it is written in the lease agreement or the HOA or both that you are allowed to rent out as a short-term rental on sites such as Airbnb and VRBO. Okay, make sure it's written in the agreement, because you don't want to have just an agreement by word, right? That ultimately, maybe a few months down the road, you have one bad guest and all of a sudden the owner wants to, disallow that and kick you out, or then you're stuck again paying monthly rent each month and no longer allowed to rent it out Airbnb. So I encourage you to get it written in the lease agreement. It should be no issue to have that verbiage written in there. Next is check city laws. We kind of already touched on this, but if you're in a city like Nashville, Austin, San Francisco, New York, and it's more prevalent in cities where the government's getting pushback from some of the residents on allowing Airbnbs in certain areas. So in residential neighborhoods, they may not allow it. So again, make sure the house or apartment is zoned appropriately in accordance with the city's laws so you are allowed to actually list that place. Again, find these things out up front so you don't get further down the path or potentially sign a lease agreement and then find out that you can't legally list that property on Airbnb. And lastly, and most importantly, once you've checked all these boxes, make sure you do your homework on how places are renting out. You can use sites such as AirDNA, or maybe talk with other local investors, or you just go on Airbnb and see what the nightly rates are and see how booked up they are in the next several months. I mean, it's pretty easy to find this type of information, and that can help you evaluate maybe where you want to look for a rental property as it pertains to a certain location in the city, a certain beach, lake, area of the mountains, wherever you're looking. And again, check what's the average daily rate, how often it's occupied. You can kind of figure out what your total revenue is going to be through the year or on a given month, and estimate your monthly cash flow. Again, is it seasonal? Are you by, again, a beach, a lake? Are you in the mountains where maybe it's popular in the winter for skiing? So you need to kind of calculate the whole annual forecast of how much revenue you're going to bring in, and make sure that you aren't going to be net cash flow negative. So I encourage you guys to do an investment evaluation for your cash flow and do a low, average, and high estimates. I definitely encourage you guys to be conservative with your investment evaluation, so make sure you aren't in over your head. So that's rental arbitrage. I do know people who have done this. One of my buddies, one of his mentors, has done this and has several properties and is making over $15,000 a month in cash flow just from rental arbitrage. And again, it's way easier and less risk and money up front in order to kind of get your foot in the door in real estate and start earning passive income on the side. It's a great strategy, and I encourage you all to take a look into it, especially if you don't have much money today that you're willing to, again, put a down payment on a house if you're not comfortable with that yet. So thanks for watching, guys. Again, please like and subscribe below, and we'll talk to you guys next week.